So what's more uncomfortable than waiting for delayed economic data? Well, trading a market that's basically saying, trust me, I'll explain it later. Because right now, traders are staring at a US calendar that looks like someone hit pause during a partial government shutdown and the dollar is reacting accordingly. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, everyone. I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief. Today, we are covering three markets that are being pulled by the same forces, which are US data delays, improving risk sentiment, and volatility that's still refusing to behave. And yes, this is one of those weeks where the market feels like it's been waiting for a message that has been stuck on typing. Let's start with the euro, because euro USD is holding firm around the 1.18 zone, and the tone is pretty clear. The dollar is easing while markets wait for delayed US data. The dollar index slipped to around 97.5, falling for a second session as traders cautiously await key economic releases delayed by the shutdown. And this week, the schedule is heavy. January's jobs report is due on Wednesday. Yes, NFP due on Wednesday. By the way, I will be live for that session. So if you have not subscribed for that or registered for that session as yet, drop me a comment and I will send you the link. Secondly, December's retail sales are also expected to be released during this week, and the postponed January CPI reading is due on Friday. Markets currently expect the Fed to keep rates steady in March, with potential cuts in June and then possibly another one in September. That wait-and-see approach is also being reinforced by the improving risk sentiment. We've seen rebounds in tech stocks, precious metals, and cryptocurrencies, which reduce safe haven demand for the dollar. On the euro side, the backdrop is stable. The ECB held rates unchanged. Its reiterated inflation is expected to stabilize at the 2% target over the medium term, while noting the euro area economy remains resilient. Although uncertainty is elevated due to volatility and global policy environments. The ECB president also warned that data may be volatile in the coming months and shouldn't be viewed in isolation. And Eurostat data showed headline inflation eased to 1.7% year on year in January, and core inflation slowed to 2.2%. So Euro USD is trading a fairly classic theme right now. ECB steady, Fed waiting, and the dollar reacting to missing puzzle pieces. Let's look at the charts. Euro USD is battling to hold above the 1.18 support level. The 1.177 is also a very, very key zone, as this is the 61.8% Fibonacci retracement level. Should this level give way, it could trigger additional bearish momentum. On the upside, 1.184 is immediate resistance to overcome, followed by the 1.198. Momentum-wise, the stochastic is around 45 on the daily time frame, suggesting subdued momentum, meaning the pair is holding up but not sprinting. So the question to ask here today is, can Euro USD keep floating above 1.18 while traders wait for Wednesday and Friday's data, or does the dollar regain traction once the fog clears? Now let's talk silver, because if Euro USD is calm, silver is absolutely not. Silver rose more than 2% towards $84 an ounce this morning, following a 10% jump in the previous session. That's not a small rebound. That's silver kicking the door open and saying, I'm back. And the move is coming after what data describes as a historic sell-off that erased nearly half its value. with traders continuing to buy the metal on the rebound. There are a few key drivers in play here. Risk sentiment improving, precious metals are bouncing, alongside tech and crypto. Japan's election outcome, with investors responding to the landslide victory of the Prime Minister's ruling coalition, which paves the way for expansionary fiscal policies. Geopolitics and headlines. Well, the US and Iran held talks in Oman on Friday to ease tension, though Tehran maintained its refusal to hold nuclear fuel enrichment. US data is also ahead, as stated. We are all waiting for the US NFP and inflation reports this week for guidance on Fed policy. It is also important to note that US Treasury Secretary attributed last week's extreme swings in precious metal to Chinese traders, describing the recent top as a speculative blow-off. So silver's story today is basically post-sell-off rebound, policy headlines, and big macro data still pending. So let's look at the charts. On the technical front, the key takeaway is very straightforward. Silver is holding gains near $82 an ounce, trading around $81.90 in the Asian session, with the broader move driven by sharp volatility and follow-through buying. The $84 resistance level is the next level to overcome, followed by $93 an ounce. On the downside, support is sitting firm at $72. This is very much a market waiting for confirmation setup, not just on the chart, but on the macro calendar as well. So the question to answer here is, after a 10% jump and another strong session this morning, does silver stabilize or keep swinging like it's trying to break its own speed record? Now, let's shift into tech and wrap things up for today, because the Nasdaq is where risk sentiment goes to either recover or overreact. US stock futures edged higher this morning as investors looked ahead to a heavy slate of US data and an packed earnings calendar, including Coca-Cola, Ford, Robinhood, McDonald's, and Coinbase. Last week's market saw an initial sell-off in tech stocks as well as cryptocurrencies, and precious metals all came under pressure, followed by a rebound on Friday as sentiment improved. From a weekly perspective, just looking at all the indices, the Dow rose 2.5%, the S&P slipped 0.1%, and the Nasdaq 100 itself is noted at 25,033 as of Friday, up 2.85% on the day, with the last 4 weeks showing a 2.25% gain. So the Nasdaq 100 is doing what it often does in this type of environment, reacting first and asking questions later. Let's look at the charts. Currently trading around 25,140, just below the near-term resistance at 25,200. Should this level give way, the next target is sitting at 25,500. On the downside, support is currently sitting at 24,700, followed by 23,900. So the key question for Nasdaq traders today is, does risk on rebound have enough fuel to hold while the market waits for Wednesday's jobs report and Friday's CPI, or does the data uncertainty cap follow through? So as we head into this week, please keep an eye on Wednesday's jobs report. As stated, I will be going live for this. So if you haven't registered for that session yet, please drop me a comment and I'll send you the link. Plus Friday's delayed CPI, and well, in between, markets are trying to price the Fed's path while the data calendar catches up. Now, does markets stay confident this week with risk sentiment improving, or does the next wave of US data bring a reality check? Because right now, the market is basically trading like everything looks fine until the numbers arrive. And with that, we wrap up your daily market brief. Brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX.com and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.